Hey traders, it's Danielle. Welcome to the free video for Monday, January 13th, 2020. So, as you may have noticed, we have an incredibly strong stock market with traders just dying to get in. Towards the end of the day, we saw quite a big movement higher in our large caps, along with a lot of tickers that have quite a bit of high short interest. We also have a very gorgeous 195-minute squeeze, along with bank earnings coming up, options expiration, and a trade deal with China. I'm viewing all of these things as very bullish. And of course, while anything can happen, I'm focusing on continuing to trade the upside in the areas with the most momentum. Now, because a lot of the large cap stocks are basically going out on their highs, it's a little bit difficult to get into those. So what I'm doing is I'm focusing on the high momentum trades, which are Tesla and Beyond Meat. So I'm sure that you've heard of Tesla's move, Beyond Meat's move. The thing about these moves is that they are happening in part because of the high short interest. So when you have a high number of traders that are shorting and betting against these stocks, and then they have a massive move, there's two things going on here. Number one, you have buyers coming in, okay? You have buyers coming in because the market's strong, everything's going good, and people are like, hey, I want to get some Tesla before that Cybertruck comes out, or whatever. For whatever reason they buy it. Number two, you have the short sellers that are losing money. And they're crying some big, fat crocodile tears because they tried to short it here, and they tried to short it here, and they tried to short it here, and then they tried to short it again at 500, and they are just not right at all. So not only are buyers coming in, but the short sellers are having to get out of their positions. And so what's been really interesting about Tesla is that Tesla hasn't actually seen short covering until just this week. They stopped adding to their position. So for me, I would argue that that's really the first step towards more massive short covering, right? Because first the shorts are going to stop shorting, and then after that, they're going to say, all right, I'm finally going to admit I'm wrong. Probably shouldn't be doing this anymore, and they're going to get out. Especially when it's up 10% almost in one day. And now, after hours, it's up another $8. So what do? Well, Tesla and Beyond Meat are two great examples, and I mean, they're very similar. Basically, the way that I have been trading these is I have been focusing on butterflies, and I've just been stair stacking them. One after the next, after the next, after the next. The reason why I've been doing this is because with these very volatile tickers, the long calls are going to be very expensive. And there's definitely traders out there that can handle that type of volatility. They can handle those type of prices. But I think that most people who are trading options, learning how to trade options, they want something that's going to be a little bit cheaper. So what I've been doing with these, and I'll show you both ways, is that essentially what you do is on the daily chart, you're looking for your target, right? You're looking for a target, you're looking for a time frame, and then you're trying to stack your trades to get those targets. And so by using butterflies, you can get really, really cheap entry points. I mean, you can pay like $1 or $2 and trade this thing higher. So with Beyond Meat, for example, my first target is 125, and it's really funny because I think it's actually going to make it there after hours. I would actually prefer it makes it there on Friday with my butterfly, but that's of course the advantage of long calls. So with Beyond Meat, you have a target of 125 and then another target of 130. So I just put these on just right before the close. So they're going to be basically flat, but this is just really my first, not really first because I've been trading it last week, but this is my new position for this week. So the first one, again, very, very cheap butterfly, cost me $1, $10 wide, so you can potentially get times 10. So if you spend $1, your max profit is $10, and that's going to be if you get to the $130 price point around this Friday. Okay, I think it has a pretty decent chance of doing that. The other one is going to be a little bit more conservative. So we have the 115, 125, 135 fly, and this would be targeting the center strike of $125. And this one was a little bit more expensive at $141 a contract. And because it was a little bit more expensive, your risk reward isn't going to be 1 to 10. It's going to be slightly less. But overall, I mean, that's a pretty cheap way to get into the trade. I also do have the long call. If you have the account size to do it, coming out, buying like Delta 70 calls 1 or 2 weeks out, that's really going to be the best way that you can come in and, man, that call moved. It's already Delta 1 now. But if you really want to just buy the move and hang on for the ride, I mean, you can definitely buy these calls. The thing is, though, with these names is that if you buy it and then that's when it rolls over and dies, I mean, you're literally buying the highs. And so that's why I prefer to do it in a little bit more conservative way. I had closed out most of my Tesla positions last Friday. And then, of course, with the move today, I thought, well, you know, I got to add some more. So I closed out my Tesla 500 fly for a double when it blew through the center strike. And then I added some more targeting a 550 price point. So with this one, because this one is $25 wide, your max profit is going to be, your max closing price is going to be $25. When you pay a price of $4.31, you potentially have a ×3 or ×4 multiple here. And, you know, you have a very relatively small debit of $4.31. If Tesla continues just ripping higher, I mean, the main time the butterflies aren't good is when it blows through your short strike. And in that moment in time, you have a decision to make. Do you want to buy back the short strike, thus breaking up your butterfly, giving yourself more risk but potentially more reward, or do you just want to close it for like a single or a double? The other thing that you can do, of course, is buy the long calls. So with Tesla in particular, because the earnings report is coming out, let's see. I don't think it's confirmed yet. 1:30. So it's supposed to be around then, but it doesn't look like it's confirmed. So the other thing that you could do is you can buy some Delta 70s in here. But the thing is unless you have a large account with a large risk tolerance, I mean, that's going to cost you almost $5,000 a pop. So for me, I typically prefer to focus on, you know, what most people can do. And I know most people are probably focused on a little bit better risk to reward strategies. And that's what I try to focus on in my teaching and everything that I do. So I hope that you were able to catch a piece of this. As for tomorrow and if it's going to keep going, we're not going to know until tomorrow. It's all going to depend on the volume and the momentum at the open. So if I get continued volume and continued momentum, I'm just going to keep using my strategy. I'm going to keep stacking them higher and higher and higher, and I'm just going to follow along this move until the thing ends. So I hope you had a fantastic, fantastic rest of your day. If you want to learn more, you can go to 5startrader.com, FIVE. And I'll be writing a little bit more about that here. It also has a little bit of coverage about Beyond Meat and AMD as well, where I have longer write-ups on these high short interest setups. So, hope you have a great rest of your day, and I'll see you in the next one.